Before we get into it, if you enjoyed these videos, please hit the like and subscribe button, and keep in mind that these are my own thoughts, opinions, and ideas. These are not meant to be, nor should you take them as, investment or trading advice in any way, shape, or form. Do your own due diligence, put in the work for yourself, and make your decisions based on that. All right, folks, here we are on Saturday, February 15th. We're going to take a look at Lucid today. So Lucid's starting to get a little bit jumpy again. We see it moved up on the 12th, a bit over 6%, and then on Thursday, the 13th, over 13.5%. Rounded out Friday at just over 1.5%, but that is already a nice big jump and was working right off of the 261 level that we had on the chart. So right where you'd want it to, and got pressure right where we wanted to. Wicked down toward the 321 level when it tried to push past it, and wicked down through the 340 level when it tried to push past it. So I am curious if we can get a new swing high above this most recent swing high of 364. I'm not talking about like long-term Lucid recovery here or anything like that. It just caught my eye, and I was wondering if, sort of like back here, you see there was kind of like a matched, it's not really a failed, but it's sort of like a double top here on these swings, and then it came down, and then it wildly surpassed, drew back, and then we got another swing high. Now obviously if you were holding the bag from that 440 level down to the 193 when it dipped, you're not feeling great. But if you caught that second swing, right, that's sort of what I'm wondering if we are maybe going to get here, or if we get something like this where it sort of dilly-dallies, puts in some additional roller coaster action, if you will, and then makes a run for it. But it is getting quite interesting on many levels. So we're going to take a few different looks. Now, if we zoom in a little, you see how it's working off of the levels on the chart, right? Respecting them really nicely, shrugging right off of that 298 a few days ago, coming down within 5 cents of that 261, recovering back to that 298 level, and then consolidating along that 321, and then, like I said, pushing up just 2 cents over that 340 level, and kind of settling in mid-range today. Now, if it does get jumpy, obviously having a look at that previous high there, but in the interim, we would have 359, if you take that fraction of a penny into account, and if it were to press through, 385, 419. So certainly some good gains to be had. Many extended levels if we want to take a look at them just for poops and giggles, but 517, 675, 833, and 930. It sounds like a crazy number to say, but if we get there, we get there. We'll say that we mentioned it a long time ago or whatever. Hasn't come down into this what could be a next good buy zone if it were to leave this 261 behind. But just to mention, that's what's down here. Looks like a pretty solid potential buy area at 231 if it were to get there. But the other thing is, if it does drop, it's a full dollar at this point. So if it loses like 33%, what's driving that? So it's always nice to say, oh, it's a good potential dip buy area, but the question is, why is it dipping such a crazy percentage? You can't always account for that and just say, oh, folks are sort of likely to show up in this buy range. And it's like, well, yeah, sure, but where's that buy range coming from? Is that coming from 33% higher? Is it, what does that fall look like and why? But we'll leave it there for now, just in case it does come into effect at any point in time. EMAs wise, this is what's really interesting to me. If you've watched my EMA videos, I love this setup. I love this short-term bullish crossover approaching the long-term EMA, right? Short-term EMA is crossing over as they're within striking distance of the long-term EMA, the 183 EMA here. And it had a nice push over it, and the 183 is just tough. It's a really tough zone. The good thing is, if you're above it, it can be a really good support level, but if you're approaching it from below, it's really strong resistance. So even if you try to knock through it, it's likely to draw you back in. But if you can confirm its support, and get some range from it, then if you ever do have, a minus 33% period or whatever, it is there as,
oftentimes equally as strong support. Now, we have bullish crossover now with the short-term EMAs. Here's what I wait for on these. I don't look for the price action to get over the 183 EMA. I look for the crossovers of the short-term EMA. So this 8 EMA was the only one that sort of very lackadaisically inched over the 183. Now we see a nice sharp move, right? We see nice pressure from the EMA. So if it were to cross over and look like this, right, it looks like a little rocket ship. If it were to cross over with that sort of bullish momentum, with that gusto, however you want to put it, that's what I would want to see. It being able to lift and carry the price action as these short-term EMAs throw their bullish crossovers through the 183. And if I'm being more conservative, I wait for like the 34, the red EMA to get dragged through, but it just sort of depends. I rarely go off of just the white 8 EMA crossing over the 183. I oftentimes wait for the 21, that peach colored one, to come through. But like I said, if I'm for any reason being more conservative, things look sort of questionable, I can sort of wait sometimes to see if the 34 is going to come through or not. But that's usually because the price action doesn't necessarily look like it wants to run, sort of like here, right? It was a really sort of like limp motion over it. Whereas at the moment, I know it's a strong wick down on Friday, but for the moment, it has the potential at least, right, to come up strong. But who knows? It could come down and retest this on Monday, and that could sort of flatten these out a little bit. But I'm going off of what I have at the moment. Certainly things could shift. Bunch of shelving here, but it is getting into a thin zone, right? So from the run from like $2 here up to 364, working through a bunch of chunky areas, right? And you see how that sort of got sticky here for it, got sticky here, and it's sort of maybe the selling pressure that was experienced here exhausted much of it, and there was able to move relatively quickly through here. Now, getting into these relatively short shelves, if you will, and does that give it a little bit more free range and free reign to move more swiftly and easily? Maybe that's the question anyway, and that is the query that I have at the moment. Order flow wise, some large scale coming out today, not much of anything to talk about here. A few larger here and there, but nothing that's like looks tremendously shocking. This is tremendously shocking, actually, in a way. If you look at the long-term chart, 88% of shares profited as of close on Friday per Webull. So to that extent, where's the buying pressure going to come from? That always becomes a question. There's a decent amount of folks underwater up here, but not a ton. But could some of those large scale orders start moving? Maybe. Can you get some renewed interest from the broader retail sector? I think that's certainly possible, right? Something with the name recognition like Lucid, I think certainly holds that potential net opportunity. But this is why I say I'm surprised that it's 88%, but I guess at some point there was a bunch of unloading and folks who either bought back in at a decently lower price or they were unwilling to hold bags. So I can't say anything about that other than good for those folks. So think or swim wise, pretty herky-jerky here on the TTM squeeze indicator. Yeah, trigger, fire, and then trigger, fire, trigger, fire, trigger, fire. I actually haven't seen that, or I haven't seen it very often for sure. I don't recall the last time I saw this like 1-for-1 tit for tat back and forth on the TTM squeeze indicator, trigger and fire. So we'll see what that amounts to, but it is getting pushed right off of the call trigger. If it can get some motion above that, you see it rejected it back here in January as well. Did get a little motion over it in December, but that was that real, like I said, sort of limp move. And so here, could it bang through that call trigger? If it does, that call trigger is situated at 338 at the moment. It has a +1 ATR. Doesn't mean it has to go there, but if it does, to 538. And we have on the chart over here, okay, We have on the chart over here, we have 516. So on that approach to 538, we have potential for a sticky 516, 517. But yeah, that would obviously make the Lucid Bulls February probably look pretty nice. Again, I don't know that it would do it. It hasn't had luck getting motion over the call trigger anywhere in the chart this far. There was a little bit there, but like I said, it very quickly faded. So that'll be the question. If it can punch through, nothing else on the chart for the last 12 months. If it can get motion over that, can it just not very quickly let go of it and lose it? That's been the case in the past, and so we'll look to see if it can break that habit this time around or not. But that EMA situation, pretty interesting to me. And then as you saw, the levels on the chart, we'll see how it reacts when it gets to and through each one of those. All right, folks, so I hope that you are enjoying your weekend so far, and as always, I appreciate you watching, and I will see you in the next video.